Good morning, everybody. Welcome to Business Profit Acceleration Group Coaching. I am super psyched because we have a special guest speaker, Priya Kumar, and I call her like the financial forensics expert. For, I think it was over a decade, she went into businesses, looked at their financials, just dissected them, pieced it back together in the right way, showed them what are the important metrics to measure and why, and how to make a tremendous difference in your business. So I don't have much more information than that. So Priya, please take it away, and I'll set it up so you can share your screen if you'd like.
Yes, please. Thank you. I do have a PowerPoint presentation. Hi, everyone. My name is Priya Kumar in California, not too far from Jim. We actually met in person. We live about, 30 minutes away, I think. And yeah, so I am a business financial coach. I focus on the financial growth, profitability, and sustainability of small businesses. Majority of my experience comes from being a business investigator. I did that for over 12 years. And just like Jim described, I looked at businesses' finances, and I got to really see all the money mistakes these small business owners make. And in my profession, the hardest part was trying to help them, because by the time they came to me, they were already ready to close their doors. And there was really no option available for them. I mean, the options that were available, they weren't in a place to really take advantage of those. So then I was like, what else can I do to really help these guys? And then when I was no longer an investigator, I decided that I'm going to take all that information and knowledge back to the small entrepreneurs and start helping them when they are starting their business. So this way they're able to structure it correctly. They have a better sense of the financial things that they should be looking at and how it impacts their business. So they get in the mindset and the habit of thinking in terms of growth, not just revenue. I just need to increase my revenue, or just need to make it to the next month. So just giving them that clarity. Apart from that, I'm a single mom of a 6-year-old crazy wild child, boys. I am also a marathon runner. I volunteer for hospice, and I have a gratitude journal that's on Amazon. And I also sit as a board member for it's called 350 Sacramento. It's a nonprofit on environmental. They deal with everything environment, so education in the community and all that stuff. So yeah, that's some of the fun stuff. And if you guys have, once I'm presenting this, if there's any questions that you guys have, I don't know if I'll be able to see the chat. Jim, you can just, let me know if they're asking any questions, but yeah, feel free to jump in, and I'll be happy to stop and answer any questions that you guys may have. Okay. Okay, so I am a business coach. My business is Pivot My Profit, and I came up with the name because I do focus on profit, and I help businesses pivot. So that's where I got that. And my vision is delivering financial security, pretty much freedom and success. I provide a map for businesses to strategically rebuild a secure and sustainable future through clarity, support, accountability, and training. My values are integrity, accountability, authenticity, and relationships. Most people don't know what business coaches do. So a business coach is someone who helps a business owner or CEO strategically develop a successful business by providing guidance, support, and accountability to take their business from where it is now to where they want it to be. Few things that I'm going to cover mainly in this presentation is understanding your finances, understanding your financial needs, and this is your own and your business's financial needs, and diversifying your accounts. All right. One question that every business owner should ask themselves is, what do you want your business to do for you? Does anyone want to volunteer what you want your business to do for you? Go ahead, Simone.
For me, my sales business, I want it to replace my income so I can get out of my job.
That's one of the biggest reasons, and it's a very valid reason. Everyone needs to have at least that one reason. Some of the reasons that I have listed here are examples: financial freedom, taking care of your family, retire without fear of running out of money. That's a big one for me, because I know by the time I retire, Social Security is going to be gone. And of course, freedom of time. It allows us to create that freedom of time for ourselves and our families. Do you know how much your business needs in order to sustain itself and you? This is one question that a lot of new entrepreneurs and even some veteran ones don't really ask themselves. They become their business. So everything that's coming in is treated as one, like this is the only need that I have, and this is the only area that I want to grow in. It's very important to have your own personal financial needs analyzed, and having a financial analysis done for your own business. You want to keep them separate. If you become your business is not taking care of you. And a lot of entrepreneurs operate that way, where they are in business, but their business will not survive without them, and their business is not taking care of them. For your own personal financial needs, you want to know exactly what your income is going to be. A lot of entrepreneurs have a full-time job when they start their business, and their goal is always to replace it. One thing that they need to really pay attention to is that they're going to have all of a sudden all of these things that they need to take care of that's provided by their employer, such as retirement accounts, benefits, medical, all those things. So knowing what income you need right now in your life that you're going to have your business replace. What are the expenses that you have right now, or that you are going to have once you start your own business? You know, there may be like your business expenses is going to be an office or whatever, but if you have a home office or whatnot, that can be combined in your personal finances and your business finances. And there are ways to like break it down where you can actually claim it on your taxes. But being very clear on what your expenses are. And your expenses are your needs and wants. So you want to make sure you have them both listed. As a business owner, you of course want to take vacations, you want to take time off, you want to take holidays. So you want to count that in as well, not just your mandatory expenses, the necessities that you need. Medical expenses, how much will it cost you to pay your own medical? Retirement, how much are you willing to put away? I tell small business owners at the end of 30 years, you don't have a pension check coming in. So make sure that you are planning for it. Lifestyle, if you want to take vacation, where do you want to go? What does that look like? If you want to be able to work from anywhere, what will that look like? And then for your business finances, you want to know, what do you need to get started? And this is where you want to work with someone to get a business plan done. And I'm sure Jim has talked about it several times, the importance of having a business plan. I tell my clients all the time that your business plan is actually your success plan, because it lists everything that you are not thinking about or anything that you are going to come across in the future. It's a manual, like your car manual. You don't know if you're going to need it, but the moment something goes down, you pull it out, and you're like, okay, I know the information is in here. You want to know how much it's going to cost you to get your business started. Funding, are you going to get investors? Are you going to get loans? Are you going to get grants? You got to really put all those in consideration. If you're going to get loans, that most of the times you're leveraging your personal assets as well. And you want to make sure that your credit score is good enough where you are able to get those loans, because there are people who will go for hard money loans, and those are short term, and the interest that they charge on those are huge, like more than 10%. Employees, you want to account for employees. How big do you want to grow? And when you're starting, what is your plan going to be? Are you going to hire someone to come train your employees? Are you going to do it yourself? How much is it going to cost you? Type of entity and taxes. So if you're a sole proprietorship, what tax bracket do you fit under? Over here, it's 15% for the sole proprietors, and then when you get up higher into like S corp, C corp, so then that will be like 35%. So when it's really important to know when you're starting out, where do you really want to be? Because when you are growing, you can always change your business structure. You can always go from sole proprietorship to an LLC, to a S corp or a C corp, but it's important to know what those requirements are for the type of entity that you're going to be. And knowing exactly when you're going to break even. If your business is bringing in money and you have all these expenses going out, you really need to have a clear number where this is going to break even. And anything above that is going to be your profit. And that part is very important. All this business finances is very important because this is how you're going to add more streams and price yourself in the market. Keep you and your business separate. The income, the expenses, profit, taxes, owner compensation. You want to have these finances of your business and yourself separate. So diversifying your account is a big part of it. This is where it comes in, like having an income account. This is where your business income is coming in. And you having an expense account, usually it's the same. Most businesses have one account where the money is coming in, then it's used as expenses for the money is going out from the same account. You want to have a profit account where you know exactly what your average profit is for each month. So whatever that lower number is, you want to transfer that into your profit account. What this does, it creates that urgency. When you see less money in your account, then it's like, okay, I need to do something to increase my revenue, or I need to bring in more, add more streams. So what is it going to be? And it also forces you to really look at your expenses. Some businesses have really high expenses and they don't pay attention to the money drains that they have. So having a profit account really allows you to see what your growth looks like. You really need to have a tax account. First 4 months of a year, people are so stressed out when it comes to taxes. And what they're doing is they're trying to get organized and file their taxes on time. And what is happening here is first 4 months, they have wasted not focusing on the growth of their business, not setting those financial goals for the year because they're just so stressed out with taxes. But if you have your tax account that's already accumulating and growing throughout the year, where if you know that you fall under the 15% or the 20% bracket, you are putting that money aside every month from your revenue. When tax season comes in, you can just file and pay it. And you don't have to worry about all the extra penalties and interest that you're going to have to pay. Once you pay the 20%, the 15%, whatever the tax bracket is, you're not going to end up using all that money. Because remember, when you file your taxes, you're going to have all these credits and deductions and all these things. So that account is still going to have this lump sum money that's left over. And you can turn around, either pay yourself a bonus, or you can use that to invest it back in your business. Whatever your plan or your goal is for that year, you can just take that money and invest it back in your business and keep moving forward. And you're moving forward with more clarity because you're not stressing about money. Owner compensation, whatever you are paying yourself, you need to have a separate account. You never want to commingle your funds. Do not pay your personal bills from your business account. Do not pay, like other loans or things like that from your business account. Now, if you're a sole proprietorship, you are the business pretty much. Even then, I tell my clients, keep your accounts separate because it provides your business account will provide you that clarity. When entrepreneurs are making financial decisions, they're not really reading their profit and loss statements or balance sheet or any of that. They are going off of their bank statements. That's what they're looking at, and that's what they're using to decide, like, okay, I have this much money, or this is how much I made this month. Types of funding. Yeah. Yes, go ahead.
Couldn't find the mute button. We had an in-person networking meeting yesterday up in Auburn, California, and it was this guy's turn to speak, and he said, "Oh, I couldn't find the mute button." We're so used to Zoom. A couple of things. Do you want to talk about liability protection and how that impacts people with entity structuring and commingling funds?
I don't really go in depth with that. I leave it more to the CPAs and the accountants.
Okay. I think for this audience, I'll just mention.
Yes, go ahead.
It's definitely a great idea, and I'm so glad you brought this up. Well, everything you've talked about having different accounts and really calculating ahead of time your expenses, your profit. I know you're going to talk a lot about profit first because that's such a cool concept. But with commingling funds, if you have an LLC, you have an S Corp or a C Corp or any entity like that, one of the reasons is to reduce your tax burden, which is lovely. The other reason is to protect your personal assets. And if you commingle funds and then you get sued, then the lawyer is going to do what's called breaking the corporate veil, which basically means you have no liability protection and your personal assets, your home, etc., will be at risk.
That's very true. And another thing is some of the states actually have clauses in their revenue and taxation code where you can be held liable for a tax debt. California actually has such a law, which a lot of people don't know. California actually is the hardest state to do business in. We have 36 different taxes and fees. You really need to know what fees you're paying in your industry, because that helps you see, like, okay, this is what my percentage is going to be required for all these extra fees. So the tax bracket that I talked about, that is actually for the federal, like the 15% and all that. Now, if you're in state of California, depending on what city you're in, you have a different sales tax. Now, every industry does not charge sales tax, but if you're in the food industry, construction, all of that, there is sales tax. And I think Sacramento is like 8.75%, something like that. So that's like an extra amount that you have to put aside for sales tax because you're filing two different returns in the year. And for sales tax, California does have a clause 6829 dual determination in their revenue and taxation code, where a responsible party, and this could be the CEO or the CFO of the company who pretty much has the responsibility, like the financial responsibility, and they don't pay the taxes, they can be personally held liable for corporate debt. You don't want that. It's very messy. And it's a lot of penalty and interest too from the time that all that occurred. So yeah, you don't want that. Moving on, types of funding available. If you're going to use your own money, great, but you need to really plan it, because if you're going to use your own money, you want to make sure that you have money enough for your business and for yourself, because you still got to sustain yourself. And when you're starting your business, you're not going to have money coming in right away. So you want to be mindful of that and how much of your own money you're going to use. If you're borrowing from family and friends, I tell people all the time, if it's not on paper, it does not exist. So if you're going to borrow from your family and friends, if someone wants to donate their money to you, great. But if they're loaning you money, make sure you put it in black and white. Get an attorney, get someone to put a contract together. Investors, if you're getting investors in your company, there are several ways to go about it. You can get an investor who is not involved in the company at all, where they just give you the money, you have a contract, you're going to pay them back in this much time, this is the interest that you're going to pay them, and that's it. some companies allow investors to have a little stake, little portion of their business. So they will decide what their ownership looks like. And I tell people all the time, do not give anyone control of your business. And if you're getting an investor, do not make everyone a member of your business. Because the more people you have, everyone's not going to understand your vision, and it's going to slow down your progress because there's more chatting going on and more disagreements than the growth, the planning for the growth. So if you're getting investors, be very clear on what type of investors, what you're looking for. Do your math, do your calculation, have your business plan done so you know exactly how much you need. And when you have a business plan in place, that's something that you can show these investors. And if you, if you're not operating, you are just looking for investors in the beginning, business plan is okay. If you are in operation and say 5 years later, you are pivoting and making changes and you're looking for investors then, you really want to show them profit. And that's why showing profit is so important. Business loans, same thing. They really want to make sure that your business is going to survive. Otherwise, you are huge risk that they're taking if they're giving you this loan. Grants are amazing. There are lots of grants that are available, especially for women-owned businesses and minorities. So definitely take a look. I know that there are some on SBA, on the SBA website, and there's some other websites. Jim, I will send you a link because I did do research for one group that I was presenting to, but there's so many, like you really have to go through them and they all have deadlines. So if you find one, you can get a grant writer, or they will have instructions. You can write your own grant too, but grant's one of the easier ways to go about it because it's free money for your business. Now, funding requirements, these are a few things that you want to have in place. So a business plan, for sure, as I mentioned earlier, it's a success manual for your business. Good credit score. If you have asset, that's something that you are going to be using as collateral or leveraging your assets. Your business needs to show cash flow, and keep your current debt low as it can be. Because when you show a lot of debt, then that means your business is really not doing well, and it's going to be harder for you to get any loans. These are some of the statements that go with business. So balance sheet, profit and loss statement, budgeting, pricing, understanding good debt versus bad debt. You don't need to master reading any of these. These are more for like accountants, like especially the balance sheet and profit and loss. Most people don't really understand it, but you need to know what the numbers on these documents mean. So you can set better budgeting for your business, and you have a right pricing, and you have a better understanding of the money movement in your business. So if you have a great accountant, you can sit with them, they will explain it to you, and you can use that information to set financial goals for your business. If you were to only learn one statement, I tell my clients, learn the income statement because it has the revenues, the profit and loss, and expenses. And it gives you a clear picture of what's happening with your business. The balance sheet is what dives in deeper because it has liabilities and all that other areas of it, your assets, liabilities, all those things. But this will still provide you a lot of information about your business, like where the money is going, where it's coming in from, what do you really need to focus on. Revenue, all streams of income that your business can have. So products, services, social media is a big one now. A lot of people are selling their products on social media, or even creating classes that they sell on social media. Donations, fundraising, creating classes and events. The reason you want to have multiple streams in your business is because it gives you that clear, first of all, they're related. So you're not reinventing the wheel. You're not trying to come up with a new product or service to add another stream of income. You want to be able to stack your streams of income. So if you have a product, maybe you can have course online that explains how to really use that product to get the full benefit of it. If you are a coach, you can have several of these. You can sell your packages on social media, you can provide classes, you can hold events to educate people. Having multiple streams of income will also really show you what are some of your customers' preference. So if you see that people actually like to buy your services online, then focus your energy there. If they like your product that you're selling, then focus your energy there. You want to be able to see which area is bringing in the most amount of revenue, because that's what your customers are liking. If your focus is what your customers are not liking, so suppose they love your products, but you're constantly trying to push your service online, that energy is wasted. You want to have the clear picture of, okay, what are the income streams that you have and how you can grow them. You want to understand all your outgoing expenses. So everyone has your essentials and non-essentials. So as a business owner, your essentials are going to be your utilities, your lease, your rent, all those things. Non-essentials are your subscriptions. So if you're subscribing to like an antivirus software, that's an essential. You need it, right? But you can still save money on it, so you don't have to get the most expensive one. A lot of businesses also have a lot of subscriptions that they don't use. It takes 5 minutes to subscribe for something. So be careful of that. If you're going to get something that you're not going to continue using, make sure you remove it. Otherwise, you just have that money drain that's sucking out all these dollars. In the essential part, like marketing is a big part of it, which a lot of people don't understand at times, and they don't know how to measure it. If people don't know that you exist, they can't buy your products or services. They can't do business with you. That's why marketing is important. And if you're marketing in different places, I know that social media is one of the most popular ones because it's so cheap. You want to measure your revenue from it. Is it really bringing in revenue? If it's not, then you want to invest that money somewhere else that's going to give you more exposure and actually going to bring in more customers and increase your revenue. This is as earlier when I mentioned to you that most businesses look at their bank statements, their business bank statement, and that's how they make their financial decisions. This is just an example of one. And I want to ask you guys, if you just looked at this bank statement, will you think that this business is doing amazing, or is it just doing okay? So you can put it in the chat if you think it's doing great, 2, if you think it's doing okay. $1.5.
I cheated because we went through the slides previously.
Yes. Anyone else? What do you guys think? Okay. You guys are pretty good. I usually get ones. This business is doing just okay. And here's their profit. So now I know that those of you who said 2 or you were thinking 2, you guys are going to be fine because you're like, it looks good, but I don't think it's doing as good as I want it to. A lot of business owners, when they start their business, they think that the ending balance on their bank account is actually their profit. It's not. You have the beginning balance, and then the deposit that's coming in is what your revenue is. Everything going out, including the bank fees, are your expenses. So your profit is your revenue minus your expenses. Now, keep in mind, if you are transferring money from another savings account and putting it in this account, it's going to come in as a deposit. That's not your revenue. So you want to separate that and subtract that from your revenue when you're calculating your profit. Now, when you know your expenses, and this is pretty simple, like, because you can just look at your checking account and know exactly where the money is going. This is one of the easiest ways to organize your expenses and get a bird's eye view of it. So you list down your revenue, your expenses, your profit, and you can do this for like, you can do it quarterly or you can do it yearly. It just gives you a clear picture of your business and where it's going. You want to put in your revenue streams. So where are your income coming in from? And once you categorize your expenses, it gives you the bird's eye view of your account, where the money is going, how it's traveling throughout your business. And this allows you to see like, okay, if I have several vendors that I'm buying products from, can you get only one investor and negotiate the price? Because you may be able to get a better deal. So you can eliminate the vendors. Your credit cards, it shows you the debts that you're paying and how much money you're paying in interest. Remember, you want to keep your debt very, very low. Your commissions and bonuses, that's what you're paying. Any apps that you subscribe to. I know this is a big one for people who put in the automated post for social media and things like that. There are some apps that are super expensive, and it blows my mind when I hear that someone is paying like $500, $600 for one of these apps. Try to find things that are cheaper that serve the same purpose for your business. And there are plenty of it out there. If you just do a little bit of a research, you'll be able to see it. Loans that you have, employees, how much is it going in for employees' salaries, healthcare, payroll taxes, all of that. Your utilities, equipments that you're leasing. If you are leasing several equipments, can you buy one that's going to cost you less over a number of period? This just gives you a clear picture of where your money is moving. And you really have to just only do this once, and you're just plugging in the numbers. You can decide to do this once a quarter or once every 6 months and see what are the areas that you can improve and lower the cost in. And what are the areas that you can increase that are more your investment, especially like marketing. You get more clarity on your business and you're like, oh, I have this new product or new service or course that I want to market. What type of marketing are you going to choose that's actually going to be an investment and not really a money drain for your business? You always want to measure where you are. So knowing the profit, where you are, and where it's going. So I tell people all the time, like right now, everyone's filing their tax return. If you have filed your business tax return, pull up your records and go through your bank statements and put it together what your profit was, your monthly profit. The reason you want to do this is why. Because it shows you how your revenue is growing throughout the year, how your expenses are, and what your profit looks like. And it allows you to make the shifts and changes. So analyzing this, your revenue for, let's say, for 2021, summer is your peak time. Why is it your peak time? Why are customers buying from you in the summertime? What's happening? What's going on? And if winter is your downtime, so all of a sudden you are now like a seasonal entrepreneur, right? What products or services that you can add that has you customers coming in year round? What can you sell or promote during the winter months? A lot of people will say, well, December and November are the slow months because no one's really buying, or they just, shopping for Christmas and holidays and things like that. Well, what can you add during those months that will increase your revenue, right? Expenses, this chart will show you how your expenses fluctuate with your revenue. So if your expenses are too high and too low, low is good. If your revenue is going up and your expenses are going up, that means your profit is going to be low. So if you are adding something that's going to add or increase your revenue, you want to make sure that it is not going to maximize your expenses, because then otherwise you are not making extra profit that you wished you did. You're just going to break even. Okay. Diversifying your accounts. This is what I was telling you earlier, like having a revenue account, having an expense account, knowing your net profit. So for this one, if you looked at this business, their expenses are 64%. That's really high. So their profit is only 35%. Now, their IRS, if they were, what is that? The sole proprietorship or LLC, if they're putting aside 15,000, that's 15%. So that will be like a sole proprietor. And the state tax, you take that out. And then your owner's compensation, you're only paying yourself this amount, which is only 10% of the whole total revenue. And that's why it's so important to know where you need to price yourself and what your financial needs are, so you know how much you're going to need to pay yourself. Or because when businesses start off, they're not paying, the business owners are not paying themselves right away. So what have you done to set aside at least maybe a year's worth of amount that's going to help you with your financial needs while you focus on growing your business? And when I get clients and they show me, when I see their owner's compensation, the first thing I ask them is like, well, first of all, I don't know how you're surviving, but what raise would you like to give yourself during that year? And then we strategically plan that growth. How can we cut expenses? What are the areas that we can cut expenses in? What are the areas that we can grow their sales in and bring in more revenue so they can pay themselves more? It's important to diversify your accounts so you get a clear picture of, okay, is my business really where I want it to be? For someone to say, oh, I make 500,000 or 600,000, it's great. But if they have super high expenses and they're not paying themselves a lot, then if your profit is very little, it doesn't matter what you make then. It may look good on paper, but there's no profit. So you can't get a business loan. You can't really pay yourself well. You can't even really expand because there isn't really much left over. Once you crystallize your financial needs and your business financial needs, you are able to set correct pricing for the value that you provide. When you have this clarity, it also helps you look at what you're providing and how you can add more value so you can charge a higher price. You can offer different types of packages, different types of products, and that's why I was talking about those different income streams, right? If you're not able to set your price at a higher level, then you want to have all these different streams of income. But as you move on, you're going to start thinking like, okay, my ideal price, I would like for it to be over here. What value can I add for it to be valued at that level? So you want to have your financial needs crystallized, both for yourself and for your business, because that's the one way you're going to be able to replace your daytime job or part-time job, or and be able to have that life that you wanted to have in order. The reason for starting your business, what you want your business to do for you, is to create that freedom of money and freedom of time. You don't want to be employed by your business, working 7 days a week, all holidays, overtime. And I tell my clients, like, would you do that for any employer and get paid no benefits? And they're like, no. Well, don't be that boss for yourself. Well, that's all I have. Do you guys have any questions?
No,
That
it
was
was,
go ahead, Simone. I know you
I
have
was
to
just going
leave
to
a little
say
early.
it was really great. It's good to know for when I get to California and work in there what the tax, because they're so different from Canada, right? So a lot of things you were saying and stuff, and that where a sole proprietor, whether you're incorporated, that all makes a difference for us. So, but very, very informative. Thank you.
And can you share your contact information, Priya?
Yes.
So anybody has questions or wants help?
That was on the last slide. I turned it off too soon.
Great.
Okay, let me see. There.
Can everybody read that?
Make it bigger. There.
There we go.
Yeah, and if any of you want to get a profit assessment done, that's something that I'm offering for free for those who have filed their tax return. And it won't take that long. I'll just ask you a few questions and just some numbers, and I can tell you where you are. And I love during my consultation, this is when I'm just doing one-on-one, my 30-minute free consultation. I tell people all the time, bring a problem that you're facing in your business, and I will give you a solution.
Fantastic. You provided so much information in a short period of time. That was incredible and super valuable. Do you have a couple of success stories that you could share with us and really lock in the value of what we learned today?
Yes. So last year, I got a lot of solopreneurs, and that's part of the great resignation where people are leaving the corporate world and starting their own businesses. These were some people who have actually been operating for a few years. And what was happening with them was they had reached that level where they weren't growing anymore. So they were just spinning their wheels and they were trying to just increase their revenue, and they were feeling stuck. One of the clients that I worked with, she was able to give herself a 30% raise because we really crystallized her financial needs for her business and her personal life, as well as adding other parts, like other income streams. She was able to put some courses together, which are cheaper because now, her coaching is way more expensive. So people are able to buy these courses, and they are very detailed. She also does events now that's able to bring in more income for her. So adding all these extra revenue streams, because her expenses were already very little. It was already low. So I'm like, there's really no way to cut any more expenses. The only way you can increase your revenue now is to add more income streams. So that's what we did for her. And then I had a hairdresser who was actually those high-end salons, and he's super amazing. He's been doing it for like over 15 years, but he's been on his own as a solopreneur for the last, I would say, 4 or 5 years. 5 years. And same thing, he had reached that plateau where it's like not growing anymore. So then we talked about like, okay, what is it that you actually really love about hair? And so we listed down some of the things. And then we looked into like, okay, what will add more value to this? And one thing that I didn't know, that there's always all these new technologies coming in for hair. And so he was like, well, there are all these things, and there's this new product that we can use, and it actually cuts time and is easier for the clients. So I was like, okay, well, how much does it cost? And he gave me a price, and I was like, how many clients will pay for that? And he was like, this much, these many clients. So he actually went back and got certified in that, and his focus became only that. And that allowed him to increase his revenue because that was the high-end product and customers were actually loving it. So he became an expert in that one area that started bringing him more people because he was able to educate women on all these new hair technology as well. Whereas before he was just trying to make sure that he can just get clients, any client in, where for cuts, color, or whatever. So sometimes just seeing what you're really passionate about, what you really love, and building on that. So he was able to increase his revenue 60% within the year. And that gave him a big bump. Another one was a health and wellness coach, and she had been a breast cancer survivor. She went through menopause at a very young age, like in early 40s, which was really surprising and shocking. She was a bodybuilder. She's a certified personal trainer. But when she started coaching clients, her hardest thing was really connecting with her clients. So I had to go back and I had to show her like, okay, why are you only bringing in your professional side into your business? You need to bring in your personal side, because a lot of people that you're working with, the struggle with the weight, nutrition is more personal. It's the relationship that they have with food, right? So I'm like, you don't need to focus on weight loss. You need to focus on educating them and providing that value where they are feeling more valuable. What are they walking away with? Because if it's just information, there's plenty of products that people are promoting, take this pill, take this drop or whatever for weight loss or whatnot. But what you are actually providing them is more value within themselves and the right way of changing that habit, that mindset. Well, it's actually my relationship with food. It's a long-term change. And she was able to pivot her business, provide a different type of coaching, and it was more of an extended period, and she was able to increase her revenue 20%.
Yeah, I think that story alone has, well, the three stories have so many important points. Like you mentioned, focus on your expense review and do it maybe once a quarter, semi-annually, but there's limited return on lowering our expenses. And it also relates to our psychology, like worrying about spending money when we should shift our focus, attention, and gratitude on revenue. So I really love that one. And then what are other ways to provide revenue? I think one of the growing things that I talk about a lot is information products or courses. And we have so much expertise in our head, and it's a matter of really getting it down. And some of us are working on that. So wanted to really highlight that. And then you talked about a couple of people narrowing their focus. And that's just, so many people are afraid to be, let's say the fitness nutrition expert focuses just on menopausal women. That's a huge market.
Yep.
But the message is so clear and so compelling, and the tactics are specific to that audience. And you get, 5 or 10-fold return on investment from your marketing. The other thing you said, which I love, is in your first story, you explained how you thought. And I'd love for you to go through one more quick example of what could be considered an expense. And then how do you do the calculations? How do you measure or determine the interventions or actions that you're going to take to make it high return on investment, not an expense? So I think that's what you really help people with.
Yeah, because what happens is sometimes people are too scared to spend money in their business because, we want to keep the expenses low and things like that. And I tell them, every expense is not a bad expense. Remember, we have good debt and bad debt. So if it's an investment in your business that's going to grow, that's going to help you grow, remember, it's the value that you're getting and the education that you're getting that's going to help you for the rest of your business life. Like working with a business coach, that's an investment because you're going to get all these clarity. And I tell people there are lots of coaches out there and there's lots of information out there. You can find all this information with a click of a button, but do you really know which information is what you need in your business and how you're going to apply it? Working with a coach cuts that process out. They have the information, they have the experience, they can provide you guidance, and everyone's business is different. Even when you're in the same industry, what you are going into that business, like your big why, is different. So invest in yourself and in your business. I have a lot of female coaches, and one thing that I run into with them is that they have a hard time raising their price. They have a hard time really asking for the right value. And I get it because it's something that they have dealt with their whole life, right? The women are valued a little bit less. They always put everyone before them. Even their own self-care comes very last. So it's something that I work with them too, is helping them build a relationship with money. No, you deserve it. You deserve this success. And a lot of small business owners think in terms of, this level of success is only for big companies. Well, you are the most valuable part of your community because everyone that's doing business with you, they know you as a person and the value that you bring into your business. They're not doing business with your whatever name it is, the coffee house or whatever. They're doing business with you because you bring in that personal value. You make them feel better. And I tell people all the time, no one is buying a product or service. Everyone is buying the emotion you deliver, because your product or your service is making this person feel valuable. So always that education part of it. How are you making your customers feel more valued?
That was so well said. That was beautiful. And I'm glad your comments about women came from you, not me.
So I run into it a lot. Like I have clients who are single moms, people who are leaving their job, and there's always that imposter syndrome. Like, okay, I think I deserve this, but maybe not me. Maybe it's for this person. I'm like, well, why not you? And one of the biggest thing that I do, I actually put a 14-day challenge together on money mindset, where I'm diving deep into like the root causes. What people don't realize is that it's something that they went through in their childhood that's affecting them in their adulthood. And it's causing them to have this relationship. Most people have a fearful relationship with money. You can't have more of what you fear. So yeah, changing that relationship. And one of the best ways so people always talk about mindset, right? And for some people, it's great where they'll be like, oh, I'm going to change my mindset and it's going to change for me. You really got to think about it. How does it work for you? Because we're all very different. I'm the type of person who will be like, okay, I'm going to take action first. I have to see the result. And that's what my mindset is going to stick to. That's what's going to cause me to change my mindset. And that comes from maybe me running the marathon. It was like, okay, I'm going to train in the gym and then I'm going to run. Okay, I did faster time than last week. So, okay, it's working. So now that's changing my mindset. Okay, I can do it. I see myself now. So, you really got to you got to have that relationship with money too. Like, okay, it is for me, but why do I have this relationship or whatever relationship that you have with money?
Excellent. And how can people get a hold of this 14-day money mindset challenge?
I'm going through a pilot program right now where I have like a handful of people that I'm testing it out with, so they can give me their feedback if there's anything that can be added that I can simplify it more, because I'm not trying to use like a lot of the financial jargon in it, right? So every question has an explanation. So I'm putting it out where I'm just testing it out right now.
Okay.
But as soon as it's ready.
Do you want any more beta testers?
Sure.
Okay. So can people email you for that?
Yes, for
Okay,
sure.
wonderful.
Let me know if you're interested and I will send you the template and I will do it with you. And that's one thing I love, because then people are more honest with themselves when they see like, oh, she actually went through that too and she's here, and I'm just starting out, so I can be honest with myself too.
And I want to thank you from the bottom of my heart. And also, speaking of marathons, Priya is in Las Vegas getting ready to go to the Grand Canyon and hike all the way down to the bottom and back up.
Yep.
And thank you so much for being on vacation and being willing to be here and be our guest speaker today.
Oh, yes. Thank you for inviting me. And I love doing this. I know I shared a lot of information. So if anything is not clear or something you think about and you're like, oh, I would like to know more about this, or I didn't quite understand it, please email me. I love talking to people. Like the first day Jim and I spoke, it was like hour and keep going. Now I'm like, okay, maybe we should schedule another time now too. So yeah, definitely reach out.
Awesome. Thank you, everybody. Have a wonderful week.
Thank you, Priya.
Thank you.
So much.
Nice
This was
meeting
great.
you all.
Bye.